Welcome to Stock Market Today. It's Allie Corm and Ed Carson here with a breakdown of the action in today's session and a look at how the week played out. And it was a strong rally on Friday, led, Ed, by technology.
Yeah, it was an amazing week. There was the sea change from Monday is quite there, but going to take a lot of things. A lot of stocks are flashing buy signals. Arista Networks and Broadcom arguably are flashing buy signals, and Google is right around a buy point now.
All right, well, we will be taking a look at those, but first let's analyze the market action. So today we had the NASDAQ up over 2% by the end of the day, the S&P 500 up 1.2%, the Dow up about 0.8, and the Russell 2000 up about 0.9%. So what a difference a week makes. I mean, we had that undercut of the late February low by the NASDAQ. But the past 4 sessions, including today, we've just really been off to the races.
Yeah, that undercut the lows on Monday on the NASDAQ, and so that was really discouraging. It really looked like we were heading down to the lows. I mean, honestly, but we came right back on Wednesday, staged a follow-through day on the S&P and Dow, and then kept on running. On today, it looks pretty clear like it's going to be a follow-through day on the NASDAQ. We don't need it, but it's always nice to have. But that's further confirmation of this rally, really strong day. It's a triple witching day, so you're going to see lots of volume. But still, it was a 2% gain. In all the major indexes, best week since November 2020. All the major indexes above their March highs. So that's a gain that stands out. I mean, that's a character changing move that we had. I mean, it doesn't mean that we're guaranteed to new highs, but when you combine this with how there seems to be more breadth, stocks that are showing buy signals that weren't there like a month and a half ago when we had a fall today, this is clearly to me the best looking market in 2022, which isn't saying much, but it's.
But coming from you, it is.
Well, yeah, gloomy Gus like myself, but negative Nelly. But it's clearly, the market seems to be in the best shape that it's been all year.
All right, well, we'll take it. And this is a slightly delayed chart. So we did get a close above the 50-day line for the NASDAQ. So also encouraging there because there was a time that we were concerned about resistance at that declining 21-day line, and now above it in a big way. So now we want to see if we can hold above that 50-day and continue to clear highs going back earlier in 2022.
Yeah, and it wouldn't be the worst thing if we paused here or even came back a little bit. I mean, obviously you want it to go on and on and on, but we've had 4
eventually. We'll take it one day at a time.
Yeah, I mean, if we fall, 0.5% or even 1%, on Monday or over a couple of days, it's not the end of the world. I mean, Dan Fitzpatrick was on IBD Live earlier today and was talking about, hey, I want to see higher lows. It's not just the rises. He wants to see pullbacks in the major indexes and stocks. So they pull back. And so, yeah, you pause, but we're moving higher as opposed to hitting new lows, which we were doing for a few months.
Mm-hmm. And even though on Monday it did look pretty gloomy, we as the week wore on, we were starting to say, hey, this could be a tradable rally from here. Let's take a look at stocks that are continuing to set up. Are there actionable names? So it started to look a lot more promising as the week went on, which I think goes to show that you need to be flexible in your mindset. And someone who was a really great example of that was IEBD founder Bill O'Neill. Could go from being very bearish and negative to a couple days later, a complete 180. So that's how we aim to approach the market as well.
Yeah, and it is hard to do. I mean, if you had asked me, I was pretty gloomy on Monday, but you just have to be ready, and this is why you stay engaged. This is why, because what it's like, why do I even need to pay attention to the market? Back just a few days ago, but here we are. There's been a lot of buying opportunities since then. And and there may continue to be. We'll see if this rally continues to build strength. This is why you have those watch lists and be ready. You're ready, so when the time comes, you can go.
And let's also take a look at the S&P 500, which, as you mentioned, had that follow through day earlier on in the week, which signaled that we got a confirmation of this rally. Not that all follow through days work, but we want to start putting money to work on a follow through day or shortly thereafter, even if you're just getting exposure with an index ETF, right, Ed?
Yeah, and that, especially since it wasn't clear, we're still not sure what's going to lead the market. Hey, maybe we get a broad-based rally. I mean, that would be crazy. We don't have those anymore, right? But maybe we do, and that's a good way to get started. The 200-day line is obviously going to be some near-term pressure. It's right around that level. So that's an interesting hurdle. They all have the February highs. I mean, there's always another hurdle. There's always another challenge, but that'd be another place to go. But really, really nice to see the broad market doing so well.
Yeah, that's a good point. And I guess until we get in a power trend, then we have the conditions that are optimal for starting to be more aggressive. So we'll have to see if we can get that rising 21 day stacked above the 50 day. And, we're usually looking at that power trend on the NASDAQ, but we'll have to see if there is a time that we do eventually get that, but we are starting to see those buying opportunities, as you mentioned, Ed. And now let's also take a quick look at the Dow back above its 50-day line on its way to its 200-day as well. And next, we want to take a look at small caps, which got above their 50-day line, the Russell 2000 ETF IWM, on Thursday. And so continuing higher today, it looks like it's approaching its highs from February 10th. And let's also take a look at the 10-year Treasury yield, which remains at very elevated levels.
Yeah, I mean, the Fed is raising rates. It's going to raise a bunch of times. The only reason it wouldn't raise rates is if the economy or the markets are so terrible. So you can't think, well, hopefully the Fed won't be raising rates. They're going to be raising rates unless things are bad. Okay. So that is an issue going forward when you think about, especially for some of those highly valued growth stocks, some of which had really strong weeks, still something to keep in mind. If nothing else, don't put all your money into aggressive growth because it'll be interesting to see. That might be an area that struggles. But, again, another big week for Treasury yields.
And now a brief run through of some sector ETFs just to give perspective of some of the breadth that we're seeing underneath the surface. So here's a look at XLE, and we can go ahead and just take a look at the weekly chart. So it looks like down about 3.8% for the week, but off of lows after a pretty big move in energy names. Let's also take a look at the metals and mining ETF XME, reversing higher for the week, up about 0.5% by Friday's close. Then we also have XLV here, the healthcare ETF. So a big week for healthcare stocks, up over 6%. Let's also take a look at growth, the IBD 50 ETF, a good proxy for that, up over 5% and getting back above that 10-week line, a 50-day line on the daily chart. So for the first time in quite a while here. And let's also take a look at speculative growth through the ARKK ETF, up over its 21-day line and trying to get to its 50-day line. So starting to see some interesting action underneath the surface here in terms of the strength in growth now. And healthcare also a strong mover this week.
Yeah, and when you combine that with the commodity sector still doing well, and there's other sectors, so it's encouraging. Don't know if there'll be one that really takes the lead, but a lot of strength in a lot of different areas right now.
All right, and now let's take a look at some setups and potentially actionable names. So here's a look at Arista Networks ANET, stock that cleared a trend line today and some volume behind the move.
Yeah, so that was really encouraging. Yesterday, it sort of came late in the day, just above, sort of came right up to the trend line. And now today, much stronger volume, got right up there, really clearly there. So this was a clear signal today with that move, that volume. So that's actionable from that. Still probably actionable there. You could also wait. There's sort of an early entry off of 133, sort of share some qualities with a double bottom. And then there's the official buy point, but it's a good place to get buying maybe an early rather than trying to wait for it to run up all that way. So, there's some elements in there. So, the PE isn't too high. It has pretty strong growth. The RS line has been holding pretty well near highs for several months, which not many tech stocks were doing that during this stretch. So, showed some resilience, even though it did come off a fair amount. It
Mhm.
still looked pretty strong all in all.
Yeah, that's exactly right. So it's still about 12% off its highs, but that relative strength line is getting very close to the levels it was at December of last year. So showing that relative strength. And it seems like focusing on early entries is something we've been doing more and more lately, just to even if traditional buy point works out, getting in on an early entry just gives you that much more cushion and helps you withstand shakeouts.
Yeah, and given that the market, I mean, we don't know about this rally. Maybe this rally will have legs and go for months. I mean, there's risks to early entries, but since
Mhm.
rallies have been so short-lived or there's been sector rotation, again, don't know the character of this rally. That's why early entries have been good, because if you wait for that traditional buy point, then often, well, that's when that run ends. And it's like, oh, well, that's no good. So it'd be great if traditional breakouts worked as well, but early entries, even then, would still have their place.
You're right. They do come with their risks, but at least you know pretty quickly if you are wrong. So that's the thing. If you're gonna take on that risk, you also have to be willing to get out. So something to keep in mind there. All right. Well, next on our list, another A stock, AVGO, Broadcom in the fabless semiconductor group. We also saw a strong move from Nvidia today, for example. Rambus is a stock in this group we've been keeping tabs on, but Broadcom up about 5.6% for the week. And taking a look at the daily chart, an early entry here as well.
Yeah, I mean, there's a couple of ways you could look at it. There's the 614 area that from a few weeks ago, you just sort of draw the line across or down line down. And it's not far. It did poke above, yeah, like there's a trend line there. So over the last few days, it's been flashing a buy signal and it's pretty close either way. So you could start a position in the last couple of days. It's right up at that, almost at that 1614 level. RS line, even though the stock is, still 10% below the pivot, that RS line again is getting very close to the highs. And this has a pretty low PE and pretty solid growth is expected for this year. So it's, and we've seen a lot of chip makers, even though that group looks pretty weak here. A lot of chip makers were flashing some buy signals this week. So wouldn't be surprised to see that group move up the ranks quite a bit, if any of that strength continues.
And talk to us about how having the chip stocks participate would be good for an advance. I mean, clearly we do want more broad-based participation here.
Yeah, I mean, but it's also, yeah, with techs, I mean, everything uses chips. Obviously, we've learned that with automotives, and that's, you know, but everything uses chips, and so and just their market weight, by itself is there. But the fact that if chips are doing well, that's probably a good sign for some other sectors. Like I bet Arista Networks say uses some chips in its gear. I mean, it's those kind of things that it's just a sign of health as well, a sign of demand for technology generally. So it's really hard to see a tech rally without chips participating in some kind of meaningful way.
Okay, well, let's also check in on Google parent Alphabet, which had a disappointing reaction in the sessions following an impressive move on its earnings report, filling the gap there. But it looks like it could potentially be eyeing an entry for long term shareholders. What do you think, Ed?
Yeah, I mean, and that like the Google's failure after that gap up on earnings was just sort of like just perfectly crystallized sort of the weakness of the, like, Rally just couldn't do anything. Even Google flopped and everything was failing right after that follow through day. But now, yeah, it reclicked a 50-day line. I think if it gets above the 200-day line, and that'll also be above, a fair amount of trading over the last few weeks, that would be a place where either you could be an early entry just as a position trade, or if you were thinking, hey, I want to start a long-term position as a long-term leader, this is a good place to do it around those 50-day, 200-day lines, start of a new rally, because, this one has a history of long-term performance here. It held up reasonably well in this last correction all in all. Wasn't much fun if you owned it, but what it did. And this is a good place to get started, assuming you can get above the 200-day line. Microsoft looks fairly similar. It's not going to be as crazy a growth as some of these other names, but the PE is lower and it's just a steadier play. Big institutions presumably are going to support a stock like this.
Mm-hmm. All right, Ed. Well, another week in the books. What should investors be focused on over the weekend to prepare for the week ahead? Because it's a very different picture today than it was last Friday for the market.
Yeah, very different, very different. And look, hopefully investors have built up a little bit of exposure. There's no reason, and I think the thing is that rather than just like buy anything, work on that shopping list. Okay, this is the time, you get ready, get a nice broad list of things so you know what the sectors are doing, and then get sort of what we like a ready list of stocks that are in buy zones or really close that you really would be interested in if they showed this or that, like so you're ready to take advantage, and then add exposure gradually. I mean, look, if this market really does have a strong run, you don't need to get everything now. Let
Right.
the market continue to prove itself. It's definitely showing encouraging signs, but I just don't try to go from 0 to 100 or 20% to 150% exposed in a
Yeah.
day or two. If this market reverses, it would not be fun in that situation.
Mm-hmm.
So just there are opportunities there. If we go on a run for 6 weeks, 6 months, boy, it won't make that much of a difference if you wait, if you're gradually moving in for over a few days or weeks.
Yeah, that's so right, Ed. I mean, I definitely ramped up my exposure a bit as the week wore on. But something that I keep reminding myself is when you look at model book stocks of the past, they didn't all break out on the follow through day. It was in the days and the weeks following that leadership really started to become evident in those stocks underneath the surface, starting to break out and go on their runs. So you're right. If this rally does have legs, I'm definitely keeping my eyes peeled in the coming week and weeks to see what stocks are really going to show themselves off as those leaders in this next rally.
Yeah, and hopefully this works out. It's a lot more fun when the market's going up, that's for sure. But we'll just keep on and just be flexible. If the market
Yep.
turns, I know you will be ready to back off and back out, and that's what everybody needs to be able to do. Have that exit strategy, even as you're trying to get in.
No doubt. We'll be taking things day by day and keep an open mind as well to all scenarios as always. Well, thank you, Ed, and thanks everyone for watching. We'll be back with more on Monday morning on IBD Live, so make sure you join us, investors.com/IBD Live for all the details. We'll see you there and right back here after the close on Monday too.